Hello, I'm Jen Kohls of Richardson Capital Management, and I'm joined with Dan Brown, our Director of Investment Management. We're here to provide the economic and investment update for April 2024. In looking at the performance of equities and fixed income in April, both struggled somewhat after a 5-month rally. Overall, stocks declined modestly, though small caps struggled the most. Dan, what was the reason for the modest declines in equities this past month?
Sure. So the catalyst for the modest declines in the stock market was the fact that investor expectations for when they expect the Fed to begin cutting interest rates has been pushed out. So as we talked about previously in our letters and our video updates, we noted that at the beginning of the year, investors were expecting the Fed to cut interest rates 6 to 7 times, so 6 to 7 quarter point decreases beginning in March. We're past March now; those rates haven't occurred yet. As we sit here now in May, we notice that those expectations for when investors expect interest rates cuts has been pushed all the way out to September. Reason being, inflation hasn't come down in a symmetrical way that it has over the past year or so. So that pushed interest rates a little bit higher. So financial assets like stocks and bonds suffered during the month. But as you mentioned, we're coming off a very strong 5-month historic rally, so not a major concern. And as we look at fixed income, they also suffered due to the higher interest rates. So interest rates, moved up to about a 7th-month high in the month of April, which again kind of surprised investors. So modest declines for both stocks and bonds during the month of April.
Gross domestic product, or GDP, is a measure used to evaluate economic activity. First quarter GDP was a little weaker than expected, but still positive. Dan, what does this mean for investors?
So Jen, it probably means that this soft landing scenario that we've talked about is probably still playing out, in 2024. So as we look back at 2023, we saw that GDP came in at about a 3.1% pace. So pretty strong growth. I think that surprised a lot of investors. And as we enter 2024, as you mentioned, growth was a little bit lighter than expected in the first quarter, but again, still consistent with that soft landing scenario of a little bit weaker growth, but we need to see inflation come down a little bit further from here.
Circling back to interest rates and inflation, some economists describe the recent trends of inflation readings as sticky. Dan, what does this mean?
Yeah, the concept of sticky means that inflation readings have stopped coming down in a symmetrical way. So we're showing a graph here that looks back at the past couple of years showing the path of inflation. So we see post-COVID, we had a very short recession there, but it was, fairly severe. Governments pushed out a lot of fiscal aid to consumers, which they spent, and that pushed inflation readings to about 9%, which was somewhat troubling. And then we saw inflation come down in a fairly symmetrical pattern for about a year and a half. But the most recent readings, the past 3 or 4 months, have been somewhat sticky, meaning they've kind of moved sideways, which has unnerved investors a little bit because investors were hoping that inflation would continue to fall in a fairly symmetrical way, and that would allow the Fed to begin cutting interest rates. So that hasn't happened. So that timeline for when we can expect the Fed to cut interest rates probably has been pushed out, as we talked about already. So what it means for financial markets is that we should expect a little bit higher for longer with interest rates. So we already talked about that interest rates moved up quite a bit in the month as they have over the past 6 to 7 months. And again, we should expect maybe the first interest rate cut from the Fed probably is now pushed out to September.
With all that in mind, what is our outlook for the economy and the financial markets?
Sure, Jen. The outlook is still positive, even though we had a little bit modest negative returns in the month of April. Outlook is still positive, so we still think that soft landing scenario is the most likely scenario that's going to play out. So as we talked about, economic growth came down in the first quarter. Again, not totally surprised by that. Wouldn't be surprised if economic growth for the full year trends around 2%. And we still think the Fed and other central banks will be allowed to cut interest rates later this year, but we're going to need to see a couple months of declining inflation readings that aren't sticky anymore.
Thank you for your insights, Dan, and thank you for watching. If you find value in watching our monthly videos, click like and subscribe below.